afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Ajay Sharma as well as Aisha Faridi, and we're looking at the markets which are cruising comfortably above the 19,800 mark as we speak. Yes, there was an intraday dip that we saw during the trading session, but not by a whole lot. So 19,800 is where we have been holding our ground. In fact, with the last couple of trading sessions, we have managed to eke out gains of almost 400, 500 points because we were staring at almost 19,400 at one point of time. The mid caps and the small caps today are mirroring the large caps, so there's a broad-based recovery which we are witnessing at this point of time. It's the second day of outperformance coming in from the real estate pack. So after that 5% gain that we saw yesterday, they are building onto gains today, 1.25% higher. And today, of course, the gains have been led by Phoenix Limited from the entire real estate basket. So we are watching out for that. PSU basket, that's the only one which is bucking the trend today. So that's the only pressure point for the markets, the PSU banking names. But partly that's also on account of Bank of Baroda, which is of course seeing a slip on account of stock-specific news flow. From the heavyweights, it's Reliance, which is up a good 1%. So that's supporting the market. You have ITC, HUL, which is doing quite okay. And then HDFC Bank as well as Kotak Mahindra Bank are participating today. But Aisha, it's, IT, which is a bit weak. So TCS clearly not excited ahead of its numbers. And then it's dragging down Infosys, HCL Tech as well with it.
Yes, that it sure is. Although up 100 day before, these are the three names which actually saw quite the mighty move. Today, of course, it's Wipro that's compensating with what you're seeing on a TCS, Infy or HCL put together. Wipro is one amongst the top movers. Today, 3.5% is the move that you're seeing on Wipro. But got to doff your hat to Hero MotoCorp. That's sitting pretty with a 4.25% gain today. There's Ultratech Cement, Unilever, Dr. Reddy's, Cipla. These are where all the traction spots are. It's, of course, once again livelier for the broader end of the market, wherein Idea is sitting at a 6% gain. There's Ramco Cement, which is holding out very smartly, a 4% move coming in there. And look at the comeback that you're seeing on Vedanta as well, a solid 3.25% move. But talk about stocks in focus, and we've been, pondering about BOB ever since RBI banned fresh onboarding of new customers onto their app. That's BOB World. Macquarie has come out with a note, and they say that they see a hit in the near-term asset liability growth for BOB, and that 43% of time deposits are sourced via BOB World, that is their app, and which is why you're seeing soured sentiment on BOB from the word go. A QIB nod for 259 odd crore rupees at a price point of 269 thereabouts per share for Lakshmi Organics. That's been a stock which has been focused with buyers like ICICI, True MF, Society Generale as well. And then Hero MotoCorp, we were just talking about as to how this is the leader within the Nifty large caps. CLSA has upgraded the stock to now a buy from the earlier underperform, and they upped the price target all the way to 37.01 on Hero MotoCorp. 30.98 on the stock right now, so that also indicates a fair amount of headroom there. The key catalyst, according to them, the potential higher valuation for Ratha Energy that they believe is going to add significant upside to the stock in the near term. But yeah, just looking at the global picture, we're definitely outperforming, Ajay. Today, our other world peers.
Well, that's correct. It appears that, that the softening of yields actually is going down very well with global markets. And the way we've seen FI selling of, say, 800, 900 points in the last 2 days, today, perhaps that number should actually be much lower. I would watch out for that number very closely. And I was listening to, when you were mentioning about Hero MotoCorp, just a week back, who would have imagined for an issue of 5 crore, the market actually punished them over 1,000 crore, MCAP was wiped out. So all of that is getting reversed, and whoever would have bought, listening to our commentary at that time, the stance which we took, that how much financial impact would this 5 crore issue actually have on the company, would be making gains and profits right now. The other pocket which is coming back very smartly is the cement pack. Be it Shree Cement, Ambuja, ACC, Grasim, all of them are coming back because of reports coming in that the government will really push very hard on infra, at least for the next 8 to 10 months, and road players as well. So we'll talk about all of that, and even, though the Nifty is above 19,800, small cap, mid cap participating, Bank Nifty has actually come down to the lowest point in the day, and that too at a time when India bond yields are also falling in trade. So that is pretty surprising. We'll take the stock of how to position our trades in this kind of an environment with Nooresh joining us and Shrikant Chauhan today in place of Kunal. Gentlemen, afternoon. Thank you so much for your time. Shrikant, let me start with you. First of all, Nifty, Bank Nifty, both are showing very different tales they are telling today's screen if you look at both the intraday move so far. How would you trade these two instruments right now?
Yeah, good afternoon, everyone. I think since last, in fact, few weeks, whenever there is a rally in the market, we are seeing some upward activity or outperformance in Nifty as compared to Bank Nifty, and it is mainly because of the FIs which are consistently selling in the market. In fact, in the previous month also, they sold more than 5,000 crores from the financial sector. And maybe because of that, it is underperforming. And this time, PSU banks are also not participating in the overall up. But broadly, we are of the view that the way there is performance of the market and the setup of the market, I think Nifty is now very close to its crucial resistance level. In case if there is any correction, then we should look for adding some long positions. So if there is any correction up to, let's say, 19,700 or 720, there we should look for adding positions with a stop loss at 19,600. Now, I'm not expecting market to fall below the levels of 19,600 so easily. But yes, we may see the levels of 20,000. That's the overall view. And for the Bank Nifty, I think it is consolidating. And today it's a day of weekly expiry. So maybe after the correction close to 44,300, 400, it will start stabilizing. And in the next up move, we may see the levels of 45,000 plus. So currently, yes, definitely we are going to see further more weakness in the Bank Nifty, and close to 44,300, we should look for exiting out of short positions.
Come to you in a moment, but we need to take stock of that report from CLSA today, which is actually triggering the 4.5% kind of up move in Hero MotoCorp, the big upgrade from CLSA. Shrishi is here with more on that. Shrishi, tell us what exactly are the attributes the report is talking about.
Yes, CLSA has upgraded the rating on Hero MotoCorp from an underperform rating earlier. They have shifted to a buy rating now and have raised the target price from 3,142 rupees to 3,701 rupees now, and that's why we are seeing no stopping per stock of Hero MotoCorp. What they are highlighting is that the stock at this point in time is very attractively priced in, because that's trading at 14 multiple of price to earnings for FY25. So at this point in time, they find the stock price very attractive. Other than that, what they are highlighting is that it has a lot of potential to grow in terms of the revenue as well as the margin figure. Though the company has guided to have their margins in the range of 14 to 16%, Hero MotoCorp is currently near to that lower end of the range. But when it comes to the potential of growing from here on, so they believe that the kind of offering that Hero MotoCorp has come in the premium segment category, from the Harley Davidson launch to a kind of response that New Charisma is getting, this has a lot of potential to grow their premium motorcycle market share, as well as the kind of price hike that the company is taking. That will also lend support to the earnings of Hero MotoCorp, and that's why they have raised their earning estimate in the range of 7 to 10% for FY24 as well as FY25. What they are also highlighting is that onto the pricing terms, it has quite an attractive dividend yield of 5%. And lastly, what they are saying is that a further catalyst for the stock could be the potential higher valuation of Ather Energy than its last round. So all of these factors is what CLSA is highlighting for Hero MotoCorp, and that's why we are seeing a surge of 4% in stock of Hero MotoCorp as of now. Back to you.
Okay, thanks Shrishti for putting that into perspective. So of course, Hero MotoCorp surging away in the trading session. Let's go to Nooresh as well and get his view on Hero MotoCorp as well as Wipro, because that stock is also bucking the trend. Just wanted to put it on board. There was a part of the street that was excited that Wipro might be announcing a buyback. Don't think the stock is eligible for a buyback because they recently concluded one this year itself. So I don't think buyback could be on the card, but at least on the charts, what is your take, Nooresh, on both Hero MotoCorp as well as Wipro?
So Hero MotoCorp today is a one-day price action as of now, given a report. But technically, the last stop was closer to this 3,200 mark, which is where it topped out, 3,200, 3,240. So on the shorter term basis, sustaining 3,100 would be a triangle breakout. So if we see follow-up going forward, one can actually be looking at a move towards 3,400, 3,600 also. So for now, the bias is positive, add more on the way up about 3,150. 3,200. So the structure is positive. It's consolidated for a really long time. So the stock has had last broken out about 3,000 almost 3-4 months back, and it has been ranged in between 2,900 to 3,200 for almost 4 months. So looks promising. Could see more follow-up going forward. Wipro, on the other hand, made a decent bounce back from 400 to 440, corrected back to 400 levels. Out here, the strength is not that great. So till the time it doesn't cross 440, we could possibly be getting into a fresh range of 400 to 440.
Okay, just as Hero Motocorp, Ajay just flagged off what's happening within the cement pack. So look at an Ultratech Cement, Ramco Cement. The entire space is charged up as we speak right now. Shrikant, just wanted to get your take in on whether you see any opportunity within the cement pack to trade even after the move that we've seen today.
Yeah, I think yes, technically, definitely, most of these stocks are following to the range-bound patterns. Ultratech Cement is not falling below the levels of 8,200. It is not crossing the level of 9,000. So it is in the range. And today also, after hitting the levels of 8,200, it started bouncing back. So based on the formation of Ramco Cement or Ultratech Cement or ACC, we are of the view that I think they are going to continue this particular trading pattern for a longer time, because as per valuations, most of these stocks are like overvalued or they are trading above their fair values. But the way there is a performance in the overall market, most of the time, whenever there is a bottoming sort of formation in the market and there is a recovery, we see some activity in cement companies. Yes, we like Ultratech Cement at current levels, even though the stock is up 2%, 2.5%. I think from here, the stock can easily move to the levels of 85.50, 8600. It's a buy at current levels with a stop loss at 82.50. And other stock which we like is Ambuja Cement. There also we feel that the stock has formed almost multiple bottoms, somewhere close to 430, 435. So from here, the stock can move to the levels of 465 or 470. So it's a positional buy at current levels with a stop loss at 434.
Nooresh, though the PSU bank space is soft today, some other PSU stocks are doing very well. Mishra Dhatu, the recently listed stock, has darted very. Is it the up move coming on the back of volumes? Is it a big breakout happening?
So the stock has given a breakout, and overall every PSU name has been trending up. So even a Midhani Mishra Dhatu, which has gone up from almost 180, 200 in end of March, all the way to 440. The previous, say, major breakout happened at 260. Now in the near term, the stock was in the range of 395 to 450. Today we've broken that, so it's a continuation of the uptrend. And in this case, the next target comes to 520, 550. So that's a breakout, but it's a little stretch, so we cannot expect a much bigger move. So one has to keep a strict stop loss closer to 5% from current levels and continue to ride it on. So one by one, we've seen PSU public sector enterprises do well. Another name like a MSTC is also breaking out. So the list continues.
We'll take a very quick break on that note. But as we do that, hear it out from Ajay Srivastav as to what he's liking in the market right now.
I think we just need to keep away from chemicals for the time being. I think they're too overpriced given the market conditions. That's some sector we're not going to be in. I think we are almost out of pharmaceutical at this point of time. We have returning back to a little bit on the banking space, not the NBFC, but banking space. I think we're going to be there right now. Capital goods, fantastic story. Don't worry about it. Defense, lovely story because there is no supply of stock coming there. There's more demand of stock. And I think if I'm not wrong, one mutual fund has it that you can't buy bulk, a defense sectoral fund. You can only buy in SIPs, which tells you that there's paucity of supply of paper in the industry. So I think capital good, the defense, I think there is a reorientation of companies who are launching in paint business. Wonderful. One sector I will do not buy and I will not buy is low-end consumer and retailing sector. Poorly performing companies, poorly performing returns, including our largest company in India. That sector I'm avoiding totally. So I think consumer retailing is absolutely zero. It's out at this point of time. And chemicals hold, pharma out. That's the way we are watching. Capital goods continue, defense continue, hotels love it.
All right, let's take the discussion forward with Pramod Gubbi of Marcellus also joining us on the show today. Pramod, afternoon. Thank you so much for your time. Pramod, I'd like to talk to you about a space which is flaring up and the numbers actually. Q2 updates, caught the attention. Be it Poonawalla Finance, 150% higher YOY. Today, Ugro came out. Five-Star Business also recently hiked their guidance. One is getting a sense that, after GST is now becoming a norm and this Jandhan, Aadhaar, mobile phone, it appears that small ticket loans, be it enterprises, SMEs or even individuals, is going deeper into the country. And it's like a sachetization which used to happen, which happened in consumer space few years back. The 2 rupee shampoo, 5 rupee biscuit packet. Or do you think, are you witnessing this as a risk also? Because in this business, collection is a bigger issue, not giving loans.
Right. No, thank you. No, it's great to be here again. No, great question. I think a lot of people are scratching their heads around this. This is perhaps the most aggressive retail credit boom that we've seen in the country for a long time. We speak to people on the ground, distributors of loans, and clearly everybody is surprised by the strength of demand for retail loans. Now, I think there are a few structural drivers which are driving sustained credit penetration in consumer. One is, like you mentioned, with access to data, lenders are better able to assess the risk of the borrower. Also, I think there's also structural change in terms of culturally, Indians are becoming more and more open to borrow, even for consumptions. People are talking about borrowing for holidays and travel and weddings and so on, which hitherto wasn't the case, or at least wasn't as broad-based. So there are some structural drivers which can explain this increase, but there's also a cyclical driver, and that's where the risk is. You mentioned, of course, lending is a classic cyclical sector. To some extent, we've had a significant period of cleanup amongst the lenders, whether be it banks or NBFCs. That cleanup has meant that banks are now sitting on significant equity, which can help them drive the supply side of this credit boom, which will in turn at some stage result in excesses and a reversal, both in terms of higher NPAs as well as pullback in terms of retail credit growth. The question is, are we there in terms of the excesses already? Or are we headed in that direction? What we hear from on the ground is there's not much stress. Of course, there are pockets where there is stress, but most people on the ground don't see, in terms of the repayments coming through, they don't see a significant reason to worry. But at some stage, I guess, like always, the credit cycles will peak out, either because there is an event in the economy, or lenders have gone overboard in terms of lending. But at this stage, I think it looks like a Goldilocks situation where demand is pretty strong, asset quality concerns are not that grave. So therefore, I think we should continue to see this sort of growth in retail credit.
Since we are talking about retail credit, let's listen in to the management of Ugro Capital as well, because they have managed to report a very strong set of numbers for their Q2 provisional updates. But as Pramod pointed out, the question is it going to be A, sustainable, and B, what happens to collection and asset quality? Let's listen in what the reply was.
We started April at 500 crore monthly run rate. We exited at 6,000 odd crore. You add our 6 to 7,000 crore of disbursement, and that's why we should be between 9 to 10,000 crore this year. Our natural progression would take us to around 700 crore of March exit run rate in March 24. And now we're adding a little bit more infrastructure. So we're adding around 75 physical location. We entering 2 new states, which is UP, 3 new states, UP, MP, and Andhra. And hopefully by first quarter, this run rate should increase to around 900 to 1,000 odd crore. So theoretically, we should be at around 18 to 19 to 20,000 odd crore by end of next year. We want to maintain the blend of 70% of secured asset and 30% of what we call the business loan. But I must remind you that all of our business loan, a majority of that, are also guaranteed by CGTMSME. So 75% of our unsecured loan are guaranteed by the Credit Guarantee Trust. So to some extent, they are also quasi-secured. Within that band of 70% secured, we have secured by property as collateral, we have secured by machinery as collateral, we have micro enterprises, micro secured loan, we have supply chain finances, where then some sort of support from the anchors. And then we have what we call the channel, which is our Grow Extreme platform, where we have 75 plus partner, wherein there is some form of credit enhancement coming from the partner.
So take a look at what's happening within the IT pack, and Anisha just flagged off. While there is, rumor or buzz that Wipro could announce a buyback, but that's not a possibility, like she just highlighted, given that they've already done that this year too. So 3.5% higher nonetheless for Wipro. But today, the rest of the IT pack, led by TCS, is a little bit in a slumber mode. You're not really seeing any deep gashes, but both yesterday and today, ahead of the numbers post-market hours for TCS, that's a little bit lackluster. Similar is the picture for an HCL Technologies, or for that matter, even for Infi. Pramod, what's the expectation from IT? I mean, we all know it's going to be a muted quarter. Is all the excitement now only around buybacks? Is that what's going to keep the street warm on these stocks?
Yeah, no, I think short term there are demand concerns. There was a little bit of a full, recovery over the last few months, with the expectation that interest rates have peaked out, and hence the banking system is all right, particularly in the West and in the US. Banks are a big customer of the Indian IT service industry, and hence has the importance. But over the last month or so, what we've heard is, the market is looking at continued hike in interest rates, which could hurt the banking sector, and in turn continue the slowdown in growth that we're seeing for IT services. The short-term concerns remain, and therefore, the excitement could be from buyback. But I do think that the longer-term prospects remain attractive for Indian IT services. If technology becomes a ubiquitous part of our lives, it is hard to see how Indian IT services, or any technology provider for that matter, will have less to contribute to that. So to the extent that valuations have sort of corrected, given the stocks haven't gone anywhere in a couple of years barring the last quarter recovery, do think for long-term investors the sector provides a fairly attractive entry point. But I do acknowledge short-term concerns remain in terms of growth.
Pramod, how would you approach the entire two-wheeler pack? There's a big upgrade coming in today in TVS Motors, saying that their exports game is improving a whole lot. Hero Moto too, on the other hand, is upping its game as far as the premium end of their bike offering is concerned. And then there are concerns on competitiveness, or whether Eicher would be able to face this competition. Which part would interest you?
I think clearly you can see from the actions of the players themselves, there's clearly premiumization happening. Whether you call it the K-shaped recovery of the economy, or driving inequality in incomes and wealth, it is at the higher end of the two-wheeler range, which clearly has more structural demand drivers. Yes, it is also reflected in the fact that there is more competition coming into that space. It is clearly it is the fact that structurally demand is strong, which is attracting that competition. Having said that, I think we do have a positive view on iShare. We do own it in our portfolios for our clients as for ourselves. We believe over the years, iShare has sort of significantly stepped up in terms of its product quality and technology, and is ready to face the inevitable competition that was supposed to come from the Harleys and Triumphs of the world. I'm not saying that the Harleys and Triumphs won't succeed, but I think this tailwind of demand that's there for higher end bikes will mean that there will be space for more than one. For a long time, it was iShare which had more than 90% market share in the 250cc plus segment. But I reckon that that segment will be the most attractive in terms of growth, albeit will also see some competition. We're quite comfortable with our position in iShare.
Eicher within the two-wheeler pack, betting on that entire luxury and premium end. But Pramod, what about the real estate pack? Any picks from that space?
We've historically hesitated to participate in real estate developers to play the real estate story. We played it through home building materials, where you do have some really fantastic business models which are not leveraged. At the same time, there is scope for building competitive advantage through brand and distribution. So we own, paints companies, adhesives companies, pipes, fittings. There are potentially good plays in tiles and sanitary ware and electricals as well. So our preference to play the real estate cycle is through building materials, and stay away from developers. Partly because of our philosophy of looking for very low leverage on the balance sheet in the business model, and hence the preference for building materials.
Pramod, great to have you on the show. Thanks as always for taking the time out.
Most welcome. Thank you.
Okay, that's the market opinion coming in from Pramod Guppy, holding out well for the equity markets, clinging on to that 19,800 print. So let's get in some closing trades as well on that note. Shrikant, what's on your list?
I think, in this market, we like McDowell, United Spirits, which is currently trading around 1,050, 1,055. There we feel that the stock is heading for the levels of at least 1,100. We can keep stop loss somewhere close to 1020, 1025. And the other stock which we like is FSL, First Source Limited, which is around 165, 166. There we feel that the stock is heading for the levels of at least 183, 184, and it is forming some triangle sort of formation. So it's a bullish formation. It's a buy at current levels with a stop loss at 162, and we can expect at least 180 in the near term.
What about your closing strategies?
So that would be a buy on GAIL India. The stock has been consolidating well around that 120.25 mark. Setting up for a breakout, short-term breakout over 125. Once that happens, looking at a move towards 135, 140 levels in the short term. So looks like a good risk-reward trade here with a stop loss at 122.
Nooresh, tell me your view on Reliance Industries as well, and let's pull up the candlestick chart of that one, because in the last few minutes that's suddenly seen quite a bit of spike. It's high by 1.7%. I'm talking about Reliance Industries. Nooresh, your view?
So the stock has been trying to form a short-term base. We've seen a slow and steady drift from that 2450, 2500 mark. Finally, today it is trying to cross last 4-5 days highs of around 2330, 2350 levels. So this could take it towards a bounce back towards 2450 in the short term. It's only when we start sustaining 2450, 2500 when the trend reverses. So for now, it's a bounce back trade. The stock is corrected from 2650 odd all the way down to 2300, and 2300 has been a pivot point for the stock. It kind of topped out closer to this levels multiple times over the last 2 years. So this is a support area where it is bouncing from. So for now, one could actually take a trade with a stop loss at 2310 and expect a move towards 2450.
I think Shrikant spoke about United Spirits. That particular stock is also buzzing now above the 1,000 level mark. And in this series itself, you need to keep an eye out for two of them. One is United Spirits, which has got an angle of free trade agreement also, because of Diageo, the imported liquor angle, and also Tata Motors, the JLR angle. Free trade agreement, because JLR actually is a UK company which was bought over by Tata Motors. And Rishi Sunak is likely to visit India this month. My colleague Sumit Chaturvedi, who's tracking this developing story closely, is here with more on that. Sumit?
India and UK are headed for signing of free trade agreement between both nations by as early as end of October, when UK Prime Minister Rishi Sunak is expected to arrive to India, and here he will go for watching of a match to Lucknow on October 29. But that is the time sources are telling us that this UK FTA could be sealed as well. There were some contentious issues, and a team that has been trying to solve all these issues since Monday and is confident that it will be solved very soon. The contentious issues were people movement and also some other issues like import duty. Two specific sectors that will be on the watch are automobile and auto parts and whiskey and some other alcohol items. So these two important sectors would be keenly watched. Well, India's exports to UK include gems, jewelry, machinery, spices, and other kind of these items, while UK on the other hand has some high value products and scotch and whiskey and some auto parts as well. So this is important from that point of view. What happens when the both nations sign UK FTA? We all know that it had been expeditiously being done by both sides, but now it can be signed by as early as by the end of this month. Origin issue was there, but for that the flexibility is also there. We are hearing that is one of the countries of FTA will have to do certain changes to the product before it's exported to the other country, so that dumping is completely avoided. So keeping all that in mind, it's a crucial FTA, and the one with a developed nation that India is going to sign. Well, India is headed for elections next year, and trade issues will be one of the important issues that will be on the radar of the electorate.
All right, so there are two stocks you need to keep an eye out for and the triggers behind them. Time for a short break. When we come back, we'll get you some more trading ideas. The market appears to be gathering pace even above the 19,800 mark. So some BTST ideas after this break.
Back to closing trades right here on ET now. Holding out quite okay for the closing trades so far at least. It's cement, select autos like a Hero MotoCorp. They're the ones which are really leading the charge as we speak right now. In fact, talk about the broader markets. That's where you're seeing livelier action. So Idea definitely is one such name which is seeing quite a bit of trading bounce. So that stock holding out. Ramco Cement, like we flagged off, that's looking very smart. Reliance as well is gaining some ground as we speak. That stock we just flagged off a short while back. That as well is holding out in trade as we speak right now. And then, of course, you know, there are the others which are the newsmakers. BOB is still down and out. TCS is still somber ahead of its numbers later today post-market hours. But let's just flag off what else has been holding out within the broader market. Even Vedanta, for instance, that's seeing a move of about 3.25% as we speak right now. Siddharth Khemka too joins in on the show, so let's try and understand what he's making of the market so far. Siddharth, recommending buying anything, considering it seems that, last week we may have made a near-term bottom?
Yeah, Aisha. So I think we are definitely positive on the market. If you look at what has been happening, is that after the sharp outperformance from the mid and small caps, now some of the select large caps are picking up pace, especially after the pre-quarterly updates given by some of the index blue chips. So stocks like Bajaj Finance, Titan. You're seeing strong momentum from these counters after they reported the strong pre-quarterly updates. So definitely looking at the overall quarterly earnings season, we are expecting that the overall earnings season to be pretty much steady and stable despite the global headwinds that we have seen. So our expectation for the overall Nifty earnings is about 21% growth for this quarter, which will be largely driven by the auto sector, banks, and a huge profitability that the OMCs will report because of the strong marketing margins. But within that, if you look at, there are a lot of ideas that have kind of underperformed in the recent past, and with the global volatility that is being induced because of the sharp movement in oil prices, the high bond yields, and then to add to all it the geopolitical issues. So I think definitely large cap warrants a closer look, which is where we are recommending a lot of ideas.
Let's quickly take it across to Sharad as well and find out what's the chatter across dealing rooms, considering we've seen a nice rebound both in the broader as well as the large caps. Sharad, for a consecutive 2 days, what are the stocks that are being talked about?
Well, yes, in the cash market, you have rightly pointed out the broader markets have been doing well, and what we have been speaking with the dealers, they have stated that Carborundum Universal is in focus. Two main reasons for it: DI buying has been seen, and an existing DI has also increased stake in the company. Looking at the volumes itself, the volumes are 4 times its 20-day average, and importantly, the key DIs which are already invested in the company as per the shareholding pattern includes the name of Kotak Mutual Fund as well as Axis Mutual Fund. Now, going ahead, the key triggers for the companies, of course, when the third quarter onwards, new launches are expected to kick in, especially across all the segments. And importantly, there's a likely improvement expected to come in, especially on the recent acquisitions which the company had taken. So basically, these acquisitions had actually weighed down on the financials over the last 4 to 5 quarters, and now it's expected that there would be an operational turnaround as well. Street is also bullish, especially on the ceramics and minerals demand segment, as the raw material demand continues to remain strong, and that the management had also quoted this earlier.
Thanks very much for that, Sharad. Siddharth, among the pipe makers, the industrial pipe makers, the Welspun, the Maharashtra Seamlesses of the world, which are the names which you would like right now?
So, Ajay, I think unfortunately we don't have coverage on this space, so I will not be able to take that.
Have you looked at the wires and cable segment? Anything which you like there in terms of valuations?
So again, not much coverage there again, but if you look at, I think Polycab and KEI, these are the two companies which have consistently delivered in terms of consistent earnings delivery. And I think those are the places to play the housing theme or the real estate theme. These two companies could be the preferred picks within the cable segment.
That's about the cable segment, but pull in the chart of JK Tyre. That one is fairly excited. Don't know the reason why, because that stock is now up a solid 15%. I'm not sure if I'm missing any news flow there, but stock definitely excited. The other one, of course, from the price volume buzzers are also Vodafone Idea. That's seeing a breakout from the downward sloping resistance trend line. It's formed a higher low for 7th consecutive month now, so watching out for that stock. Wipro is also on our radar. It's seen a breakout from a 7th session consolidation. It's formed a bullish belt hold candlestick pattern, and the volume 2 is almost 2x the 10-day average that we have seen. Ramco Cement from the entire cement pack, wherein there's a breakout from the horizontal resistance trend line. It's hit a 20-month high on an intraday basis, and the volume almost 2.5x the 20-day average that we have seen. Nooresh, from these stocks, JK Tyre, Vodafone Idea, Ramco Cement, what is your top bet?
So Ramco Cements looks interesting, one, and then it is Idea. So if we look at Ramco Cements, for the last say from June to October, the top was around this 960 mark. Multiple attempts done around that area. We paused around this for the last 4 sessions. Today we've broken out. So this is a stock which could be starting a new trend, taking it towards 1050 to 1100 levels. So looks promising at current levels as well as on dips. Vodafone Idea is interesting for the fact that the stock recently had made a top around 12.5 mark. And we are back closer to 12. So if it can cross 12.5, that would imply a fresh breakout and could take it much higher. And also this was the tough area, which is where it started seeing a gap down back in 2022 from 12.5, 13 levels, which is where the downtrend started from. So could be critical going forward. If it can sustain 12.5, that would be a major breakout.
Right, that's the take coming in on the big breakout that you're seeing currently on Vodafone Idea as we speak. A couple of other stocks which are actually buzzing in trade, and let's just bring up some of those for you. Look at Wipro, for instance. That's seeing a breakout from a 7-session consolidation. It's forming a bullish belt hold candlestick pattern as well. Wipro is the intraday graph that you're seeing on your screens. And even the volumes that are almost 2 times the 10-day average that you see on a Wipro typically. Shrikant, what's the pattern that you're now seeing on Wipro? What's your reading on this breakout on the stock today?
Yeah, certainly. I think the way the stock is forming, Wipro, the way the overall setup it is forming, it is like quite interesting, and it has spent a lot of time, almost one and a half year, below the levels of 450. And now it is like the way the volumes are increasing and the oscillators are spanning out. I think the stock is heading for the levels of at least 450, 475 in the near term, and maybe in the long run, the stock is going to surpass the level of 500. That's the overall view that we can make out of the overall entire pattern of the stock. But yes, in the short term, yes, we are expecting stock to move towards 435, 440. It's a buy at current levels, and we can keep stop loss somewhere close to 410.
There's a small stock from a very large group, TVS Group, TVS Electronics. It's a small company, micro cap, I would say, just about 700 crore in MCAP, but appears to have shot up today. Is it a breakout? Would you term it as a breakout, Shrikant? TVS Electronics?
Yeah, I think something is really happening in this particular stock because every time, whenever the stock is surpassing its previous swing, it is forming some consolidation or some continuation formation. This time also the stock is into that particular continuation formation, and on the dismissal of 420.25, we are expecting stock to move towards its all-time highest level, which is around 500. So based on the overall formation and the way today it recovered, I think certainly we should look for adding this stock to the medium to long-term portfolio.
Look at hospitals. What is your pick over there? One hospital stock which is catching my attention, not sure whether you track it, is Shalby. I would say it will be the most underperforming hospital stock, but buzzing today. Do you track it or any other hospital pick?
Ajay, the question is for me?
That's correct, Siddharth.
Yeah. So, Salvi, we don't have a coverage, but we have a positive view on the hospitality space, the healthcare space, the hospitals. So we like both Apollo Hospitals as well as Max Healthcare. We expect that the hospital sector is kind of witnessing a strong tailwinds given the increased penetration of insurance, higher international patients flow, as well as the enhanced healthcare awareness after the pandemic that the world witnessed over the last few years. So I think with the consolidation in the sector happening, the sector has witnessed an ROE expansion due to the improved profitability, healthy operating leverage. Within that, Apollo is the large cap, while Max is the mid cap company that we like. Max has also planned an aggressive bed expansion to increase its capacity to 3,550 beds. 75% of this expansion, interestingly, is expected to be done through a brownfield expansion, which will add to the A, time to market, and B, to the overall operating efficiency for these beds. So overall, we are expecting a 22% earnings CAGR for Max Healthcare. You can say that and we have a buy rating with a target price of 660 on Max.
The healthcare space, but lots lined up. I mean, tomorrow morning you're going to come into trade, of course, keeping a close eye on all the developments with Israel and how the markets are absorbing that news flow. But not just that, we're going to wake up reacting to TCS's earnings as well, which are going to come in about an hour's time or so. Then, of course, tomorrow you've got HCL Technologies, you've got Infosys as well slated to come out with their numbers. And this week, too, you'll have HDFC Bank, HDFC Life also report their numbers. So quite a few kingpins, if one can call them that, slated to come out with their numbers. Tomorrow, of course, you'll have Angel One, Anand Rathi, HDFC AMC also report their numbers. For Avalon Technologies, the lock-in period ends for that 50% equity, so expect huge moves in this stock. And of course, the ECB is also going to publish an account of the September policy meeting minutes. So that's also going to be important from a global market perspective. But since on the subject of earnings, let me take it back to Anisha and find out what to expect from Infosys this time.
Well, yes, after the last couple of quarters of disappointment coming in from Infosys, the expectation is that on account of the low base, the growth will be stronger this time around. We're expecting a constant currency growth of around 1%, maybe 0.9 or 1.1%. That's the broad range that analysts are working with. The rupee revenue is expected to come at 38,350 crore and the dollar revenue is expected to be close to $4,660 million. There is going to be an expansion on margin front as well, given that the company seems to have deferred the wage hikes here also. So we are expecting a positive impact on account of that. Plus the profitability is expected to jump up by around 3.5 to 4%. The deal ramp-ups for some of the deals have been a bit delayed. The company had talked about last quarter how there have been client-specific and vertical-specific slowdowns that had been impacting them, especially in the BFSI, media, communication verticals, high-tech as well. What's the commentary going forward? Is there any improvement or the situation continues? And also the new deal wins that the company has signed, which will mean that deal win in this quarter will be strong. But when does the ramp up start of that? And will H2 will be materially better than H1 or not? Will FY25 deliver a double-digit growth? These are the questions that we would like some answers from the management. In terms of other details, headcount trend is also something which is important because that tells you the kind of confidence the company has with respect to growth prospects. Of course, the attrition at higher levels has been quite high for Infosys. So let's see what the company delivers both in terms of numbers as well as management commentary.
Sure, certainly we would. Siddharth, you may have observed the SIP number today, the fresh all-time high monthly SIP number, 16,000 crossed, 16,400 to be precise. Just a week back, we saw a record addition to demat accounts. It clearly appears that, you know, the investor, the saver, the Indian saver, now is turning to become an investor. How would you play this, you know, in the entire ecosystem? There are brokerage stocks. Angel One today announced entry into wealth management. Or would you go for exchanges, some of the infra providers, CDSL, CAMs? How would you play this, you know, structural shift which is happening?
Yeah, Ajay. So I think this is a very exciting space that you highlighted. Not only the direct demat account numbers have again picked up pace. So the incremental addition is now. So last month we saw the highest incremental addition to the demat accounts. We saw that the strong pace of demat addition during the COVID lockdown days. But that kind of saturated, and now again we are seeing that even the indirect route into the markets via the SIPs, that is now again picking up pace. So which is a good trend for the overall markets, that investors, or I can say the retail investors, are coming in hordes and they want to play the market directly into the equity space rather than through some other way. So that is a very exciting times for the entire capital market ecosystem. So you have the exchanges like BSE, which is a direct play on the capital markets. You have MCX, you have the intermediaries like the CDSLs of the world, and then you have the RTAs agents also. So we have CAMs. So I think this entire space will do well. BSE is an interesting company right now because of its entry into the FNO space, where it is gaining a lot of market share. Earlier, we had a monopoly kind of situation with NSE, and NSE anyways is not available in the listed space. But BSE, with the launch of its weekly expiry of Sensex on Friday, and then now the BankX on Monday, I think they will gain a significant market share. Plus, their entry into the commodities space will also help them ramp up volume. So I would say that the entire capital market ecosystem is doing well. We like BSE, we like Angel One, we like CDSL, we like CAMS. So this entire four companies will cover the gamut of the entire value chain in the capital market ecosystem.
Absolutely, the entire ecosystem has been just so robust and a buzz. But on that note, let me also take in some BTST trades before we wind up for the day. Shrikant, what's looking good for a trade?
Yeah, I think there are a number of stocks which are really doing well from the mid-cap basket. But one stock which is really catching my attention is Jindal Saw Pipe, which is currently trading at 347, 348. Here also the stock is forming some continuation formation. And after hitting the lows of 340, 43, now it is bouncing back. At this level, certainly it's a buy around 347, 348, Jindal Saw Pipes, with a target of close to 365. We can keep stop loss somewhere close to 334. So Jindal Saw Pipe is a BTST trade.
Nooresh, what's on your BTST list?
First is a buy on Gale India. The stock looks a good risk reward. Stop loss at 122, target price of 128. Second is a buy on Sun TV, which gave a breakout and has pulled back a bit. A good entry point here. Stop loss at 618, target price of 640.
Right. Siddharth, final comments from you then. The way markets have shrugged this war worries completely, and the global yields softening, retracement of the dollar index also cushioning that. You think the bottom is made now for the near term and will chug along from here on?
Yeah, so I think market took the war efforts very lightly. It kind of overcome the fears very fast. It was not that expected that because things are still escalating in the Middle East and things could go haywire anytime. But if you look at global markets, especially if you see Indian markets, they have been consolidating for a while now, and the cool off in the bond yields is definitely kind of supportive to the Indian markets, given that the expectation of the upcoming Fed rate hike could kind of put pressure in the global bond yields, the dollar index, the currency, and that is something to be worried about. The other big worry was the crude oil prices. Now, after having risen up, they have also cooled off, and despite the situation in Middle East, it is now kind of trading steady or stable around that $88, $89. So that is also, I think, now the focus for the markets is moved on to the earnings season, which will be kick-starting today officially with the TCS results. And the pre-quarterly updates have only gone to show that the earnings delivery could continue. In India, we saw the IMF upgrading the India growth estimates, plus we had the CLSA upgrading our overall overweight on the Indian market. So these are all things which clearly makes us positive on the market, even in the near term. We all know that the long term looks quite good, but even in the near term, any dip of 3-4%, these kind of positive news flows start coming in, and investors come back to give that kind of support to the markets.
Sure. Okay, just taking stock of some of the other movers in trade, and I just want to check in on what Sunteck Realty is up to. In fact, what all of Nifty Realty is up to, given that this has really been one significant strength pocket in the market. Sunteck Realty, of course, looking good. Nifty Realty is the other one that will just come for you on your screen. Not the individual names, Nifty Realty, which is still holding good by about almost 0.6%. And then TVS Motors. Remember, yesterday, DAM Capital had a very bullish price target upgrade on Escorts Kubota, and today it's TVS Motors. The target price has been now hiked to 30.51. TVS Motors is going home with good gains for itself. Escorts, of course, after that 5% of a mammoth move, today it's a lot more lukewarm. But Siddharth, Khemka, we'll let you go on that note. Good to have you on the show. Nooresh, before we begin winding up for the day, what's the market now telling you? The fact that we're almost inching closer, 200 points, and we'll be back at 20K. You think A, is that a possibility? And B, did we see a near-term durable bottom in place around that 19,300, 400 kind of level?
So the extent of recovery, the speed of the recovery suggests that a short-term bottom is in place. And we could be back to testing that 20,300 also. And going forward, 19,300, the base could even shift towards 19,500. So the bias is positive. Now, all we need is some support coming in from some of the heavyweights. Like we've started seeing a reversal in a HDFC Bank, Kotak Bank, and even a Reliance Industries. And the kind of correction they've seen in an underperformance, even a 5% move could impact the Nifty in a quick way, because these heavies are almost 30% of the index. So bias remains positive.
Okay, let's begin winding up for the day. Another good session, second consecutive day on the trot, and we managed to hold out quite okay and cling on to that 19,800 print in today's trading session, and a decent move of 120 points is what we are seeing right now in trade as we speak. In the meantime, what's also been looking good today, of course, standalone cases like a Hero MotoCorp, Wipro have done well, but telecom as a pack has not done badly at all. Cement has been the other very strong play, and so has the case been with automobiles and sporadically with pharma as well. So Ultratech Cement, Ramco have all been good movers today. Unilever, Dr. Reddy's, Cipla, M&M, ITC have all had conclusive gains for themselves. The breadth of the market as well held out very smartly. Vedanta, Idea, these have all been good winners. But yes, there was a downside also to the markets. So Coal India, after hitting that fresh 5-year high, that slackened a bit. SBI was a dip down. So was the case with IndusInd Bank. Adani Ports, Adani Enterprises closed in flat. HCL Technologies, TCS goes absolutely flat into its results announcement. Coforge, Coromandel, BEL, and then BOB, which of course closed soured by almost a 3.5% dip. But that's pretty much it on this edition of Closing Trades. We'll see you again with all the market action tomorrow morning at 8 a.m.